Good afternoon, everyone. Thank you for tuning in our program, as usual, of Let's Chat every Thursday at 1 p.m. Actually, it's 1 something, but we're always here no matter what. And with
Orestes Cruz from All in One Mortgage.
Well, as you guys know, every Thursday we're trying to bring you guys something fresh, some fresh information. We have a little bit of everything for everybody. Sometimes we have information for first-time buyers, other times for investors. But as you guys saw the topic today, what happens when you buy your first home? Is that goal, does it end there or does it continue? What is the purpose? If you're trying to invest, does your homework stop with the purchase of your first home? What do you think?
Well, that's the first goal.
That's the first goal, exactly.
Once you achieve your goal, then normally you set new goals.
New goals, exactly. You know, people say, oh, but it's so hard. No, it's not hard. It's a matter of having all the information together and knowing the process, right? And obviously having a good lender, like All in One Mortgage, that can guide you through the process, and having a great realtor like Alexandria Monge and start the process. So basically, you know, first-time buyers, they come, they buy their first property, more or less. What would you advise? Maybe how much time would it have to pass? Would have passed in order for them to maybe look towards their first investment? What do you think?
I think normally buyers are thinking about investment probably a year after.
A year after?
So the goal for a first-time buyer is save money, buy my home, and the first year is adjusting to the home,
adjusting
all the furniture,
to the home. Okay.
Maybe
getting rid of all that debt of that they use to buy furniture and all that stuff. Okay.
Correct.
Okay.
But eventually, a year passes by and you realize you build equity in your home.
You build equity, especially now how the market is. You know, what would you say maybe on a yearly basis? Being very conservative would be like the increase in value, maybe?
National average is 7%.
7%.
South Florida is a special market.
Yeah, very special people. We're in Florida, that's right.
We see properties appreciating 10% easily.
Easily.
Sometimes even more. It depends
a little
on the
bit
sales
more.
in the area.
I agree. It's all about location, like they say. Real estate's location, location, location.
And we have a big influx of investors buying cash. So all of a sudden, you buy your home for $300,000, maybe last year.
Okay.
And here comes the new investors and buys the property next door, cash $360,000.
And boom, your property is worth $360,000.
There's your comparable.
Exactly. So let's say a year passes by, and you know. Remember something, definitely I've always had that mentality that there's nothing better than to invest in real estate. No matter what, the property is always going to be there. And even if a hurricane comes, they'll pay it.
There's insurance.
There's insurance, so your investment is going to be there. I think personally, and I don't know if you agree with me, but I guess this is like the best type of retirement.
Yes.
Right?
Yes.
You know, the other day I was talking with a friend. He tells me that when actually Hurricane Andrew passed by in Miami and everything, his house was torn apart. They paid him his insurance. He used that money. And wisely, he was able to get properties at a very, very low cost. And that's how he got the ball rolling. And nowadays, that's his retirement. So let's say the year passed by. What are the requirements for an investor, Oreste?
It's 20%.
20% down. Okay.
So capital is the biggest requirement for an investor.
Okay.
So actually, you don't need additional income to purchase a home. The income that property could possibly generate, the rental income, will supplement the mortgage of that property you're buying.
Oh, I see. So basically, let's say I see a house and I want to buy. I'm going in with 20% down payment. They're not going to take in consideration my income as a person, but what that property can generate. Is that correct?
Technically speaking, yes. So we look at
Perfect.
your income to make sure that you can afford your lifestyle. But we look at the income that the property is going to generate. So for example, you could rent the property for $2,500 a month.
Okay.
And the mortgage payment is $2,000 a month.
Exactly.
It pays for itself.
So the most important thing when somebody's going to buy a property as an investment, definitely you just said something that is key, is capital. If you have the capital, it's better than having that money in the bank, which is going to pay you nothing, basically.
Correct.
Okay. Invest it in a property. And then if you don't have enough capital, maybe you can join yourself with a family member that has another part of the capital and, you know, do that joint venture. And at the end of the day, you hold on to that property maybe 2-3 years and you're going to be able to cash out.
Yes.
I mean, I know people that they purchase the properties and they fix them, whatever, and then they just made $60,000, $80,000. Obviously, you have to have the cash. But let's go step by step. like we were going initially. So they go in with a 20% down payment. They close. They have the option to rent that property.
Correct.
So the idea is that at least, or they break even, or try to make more than what they pay for on the mortgage, on the rent. Correct. Now they hold on to that property for 2-3 years. What would be next?
Well, it depends on their goals. So the biggest thing about an investor is to decide whether they're looking for cash flow, rentals, or they're looking to increase capital. A lot of buyers do a little bit of both. So if you're looking to increase capital, you're looking at flipping properties.
Flipping properties.
Normally through the banking world, there's no financing, but there is financing through a private sector.
I see.
So you find a home that needs a complete gut out, a complete repair.
Okay.
You will be required to put anywhere between 20-30% down payment, and the difference can be financed through a private lender.
Through a private lender. How much would a private lender charge?
That's where normally people will get scared of. So the thing, a private lender,
definitely.
a private lender is normally anywhere between 9-10% interest.
10%.
And you go, whoa.
And I've heard a little bit more sometimes, right? 11, 12. Okay.
Remember, this is annually.
Okay.
Let's say if you had the opportunity to buy a property at $200,000 that you could sell in the next 3 months for $350,000. So you're gonna gain $50,000 net income. Do you care if you have to pay maybe $5,000 in interest?
No, not at all.
You made 45.
As long as I made 45, that's fine.
The numbers just have to speak by themselves.
Exactly. It's just a numbers game.
So it's a matter of studying numbers. Game.
Correct. So basically, you said something important. If it's for capital, definitely the flip.
Definitely is a flip.
Okay.
Correct.
And if it's cash flow, then the rent.
Then the rent. And the rent, you would come to a lender, a mortgage banker, and they will be able to finance the property for 30 years. Now remember, when you're renting, when you're purchasing a property that you're going to keep and it's through the banking world, they need to be in living condition.
Living condition.
So
okay, when you say living condition is, for example, it cannot have the roof totally damaged.
No.
Okay. Let's say, what type of minimum repairs can the property require?
Damages to the wall, minor tile reparation. The kitchen is not so nice. It's normally where you would think that it's not pretty. You definitely want to change it, but it's still there.
It's still there.
It still works.
It has to have appliances?
Appliances are not required for financing.
Are not required for finance. Okay, perfect. So then we have, in that case, for the cash flow. Now, 2-3 years from now, the person says, wow, you know, I've had this property for 2-3 years renting. I like this game. I want to buy another one. How do you get that ball rolling?
You could finance up to 10 properties under Fannie Mae and Freddie Mac.
I like that. 10 properties, people. Are you listening to that? 10 properties.
Making the same amount of money.
Making the same amount. So then how do I take the cash out on this one to invest it in the other one?
Refi cash out.
Refi cash out. Now, I imagine that to do that, the conditions of the market definitely have to be there for the value, you know, the value has increased, must have increased, correct?
The national average on real estate is the the properties appreciate anywhere between 4 to 7% annually. That's a standard market. Not our market today, which appreciates much more than that, but a standard market.
Okay.
So it's a game of time, and that's why a lot of people look at it as from a retirement standpoint. You know, today you buy your first home and you moved into it and you're happy ever after. Now you're not throwing your money away in rental.
I agree.
But 5 years from now, just like you were saving before to buy a house, you have a little bit more saved.
A little bit more.
And equity in your home. You access that equity, you use your savings, and you buy your first investment, which technically pays for itself.
Okay.
It's building equity on its own. It's not costing you anything extra.
Nothing.
So again, you continue to save money, you continue to prepare. Here's equity from 2 homes now. That you decide again if you want to, if you need to, and you have to tap into that equity, utilize it and buy the next one.
Would you say, or would you recommend that specific property that I'm going to cash out has a certain amount of equity before I cash out?
Well, you have access to 80% of the property value.
80%. Okay. So definitely at least that I have maybe a 50% or a certain time already has increased that when I take that cash out, it's not going to affect me that much. Correct? Okay. So 80%. I always have access to 80% of all 10 properties.
Correct.
Okay.
Of any given property.
So when I reach that limit of 10 properties as an investor, then definitely I would have to sell one in order if I want to buy another one?
To finance another one.
Oh, to finance, I would have to definitely sell one.
Correct. So you could maintain 10 mortgages at any given time.
And we have Eduardo Fernandez, knowledge provided by professionals in power and making great. Thank you, Eduardo. That's from here, right? Thank you, Eduardo. So, okay, so definitely we have that set. 10 properties maximum. They would have to sell one in order if they want to continue. And maybe if that person already has had, got the experience of managing all these 10 properties, maybe they can make a higher jump because they say, I have 10 properties. Is it possible that I say, I just found a building right there with 8 units. It costs $1.2 or $800,000. All of them are rented. They're all under contract, 0 vacancy rate. Basically maybe they can sell 1 or 2 and invest in that building.
Then we're going to the commercial world.
And now we're going into the commercial world, right? Correct. So this is like playing Monopoly, people. Monopoly it's real. If you want to practice, just go ahead and buy yourself a Monopoly game and start the game. If you lose there, don't invest in the real world yet. Okay? So basically that's how you jump to the commercial world. They call it commercial, but it's basically you still have the residential side if you want buildings for condos.
And then residential, you could go up to 4 units.
So
you could purchase up to a 4-plex.
A 4-plex.
The moment you have 5 units or more, then it's considered commercial world.
Commercial.
So you could still dabble into duplex, triplex, 4-plex.
Interesting. So, definitely it's not worth, if you have an X amount of capital, please do not make the mistake of having that in the bank. Okay?
Definitely.
If you need guidance, contact Oreste for the finance area. If you want guidance in what is the investment as it is in location-wise, contact me, Alexandria Mojes, your realtor. When you're doing these type of investment, you need to go to people that have years of experience, okay, that can guide you from beginning to end. I'm not going to say, obviously, the name because it's confidential, but the other day I was in the office and I was listening that a gentleman, purchased a brand new home. He transferred himself from one country to here to the U.S. and purchased this brand new home. He was looking at it as an investment, but he was confusing investment with his primary home. And now he doesn't have a way of keeping up with the payments. Now that's where you find yourself in trouble. If you have an X amount of capital, you need to make sure first that you have a guaranteed income to cover that monthly payment.
Yes.
Okay. And worst case scenario, if you need to downsize, how much can I rent that property for? Is it going to cover my mortgage, correct?
Does it pay for itself?
That it pays for itself. So numbers won't lie, they're there. I don't know if you want to give any other recommendation for investors out there. I mean, they should not be blindsided, I guess, or get scared that if they're going to make a profit at least of $40,000, $50,000 in 4 or 5 months, it's not a bad idea that they use a private investor, but get the deal done.
Yeah, just like a first-time buyer, you got to have your team.
You have to have your team.
You have to have your realtor. That's very important. It's going to tell you what properties, what price range, how the numbers are going to work. The financing world to figure out how you're going to get it done.
Okay.
And together you'll be able to achieve the goal.
Something else, if you are looking to invest in properties to flip them and, you don't know how to start, call us, contact us. We have a team, not only of attorneys that can do the research on title, because remember, I don't know if you remember back in the days when real estate was down in 2008, 2009, we had people saying, oh, I bought this property for $20,000. I'm like, are you sure? Yes, I bought it for $20,000. And you know what they had purchased? The HOA debt. Basically, that's what they had purchased. They thought they were buying the property. And you know why that is? Because they didn't use a professional. When you're investing this amount of money, you have to spend money to make money. So you have to invest in a good attorney to do your title search, make sure that property doesn't have any major lien, because, even though certain properties have liens, these can be negotiated. Yes. People get scared when they say, oh my God, but it has a $25,000 lien. But these liens, people, can be negotiated. If the property can be negotiated at an excellent price and is in a great location, the lien can be negotiated. It's a matter of having a great attorney that does that work for you. The city and county. Once you have that, you're good to go. And if you need to fix this property, don't worry. We also have the team that repairs these properties, at a very great price, because these people are interested in making more money. So they know that if they baby you from the beginning and take care of you as a customer and they make money, you make money, guess what? You're going to buy another property and you're gonna give it to them, right?
It's a repeat business.
It's a repeat business. That's why we're very careful with the service that we give. And I mentioned it yesterday, and I imagine you're exactly the same. You know, the sales does not stop when we close a transaction. It continues. If the client keeps calling you, oh, I need this, you're there because you know what? You need that client to refer you more clients. So you can be sure that if you're looking to invest, financial again with Oreste, with a part of real estate with Alexandria Monge. Would you add anything, Oreste?
Well, you're talking about clients, we let buyers know that they are closing and we're going to be great friends for the next 30 years.
Exactly. It's funny that you say that because in 16 years that I've been in this business, most of my clients, they started out as clients and now they're like great friends. Yeah. They become friends, like family. And you know what? Because you want to keep these great relationships. Our business in real estate is based in relationships, long-term relationships.
It is.
Okay. Well, I mean, I think definitely, I hope this was something interesting for all of you out there. Remember, if you want to invest, there's still time. There's not as many flip options, but there's still some, right? You can still find. The most key factor there is raise the capital. Yes. But don't enclose yourself. If you have $20,000, $30,000 that you still need, we can find an investor to lend you those $30,000 so you can make 70. Does it make sense?
Yes, it does.
Don't stop investing because you lack $30,000 or $20,000 when you're going to make $70,000. It doesn't make sense. The money is there. The opportunities are there. It's just a matter of working with the right team.
Good.
That's it. Well, guys, I hope you enjoyed this information. Definitely, if you know of anyone that is looking to sell, that's super important. I think we've posted it. If you know of anyone that needs to sell or have issues in their mortgage, because, you know, there's people that sometimes they're up here, it's the market, sometimes you're down here, or they just need to leave, or they haven't been able, they lost a job and they need to sell the property. We have cash buyers as well. We have cash buyers that if the property is priced correctly, we can take care of that sale right away. You can get your money, restore your credit, and how long can a person buy after they've done a short sale?
A short sale, 3 years.
3 years. Let's say the idea is to avoid the foreclosure, right? But let's say they do get a foreclosure. How long can they buy right after the foreclosure?
3 years as well with FHA.
3 years?
Conventional is 7 years.
Oh, wow. Okay, yeah, I know. It's 7 years. So 7 years for conventional and 3 years for FHA. So, but the idea is to avoid maybe the foreclosure, right?
Correct.
Because that way they can like easily get back on their credit.
Conventional loan, and if you want to be an investor, it would take 7 years.
It would take 7 years. So you don't want to get there. Fix the problem ahead of time. Be preventive. Don't wait for the problem to get there to take measurements. Okay, well, thank you so much. Remember, guys, every Thursday on Let's Chat with Alexandria Monge, Realtor, and
Oreste Cruz from All-in-One.
And we're going to try to see, Oreste, if maybe for the next time we're trying to bring somebody here to talk about inspections, because I think that's a key factor, especially if you want to go into the investment world. You want to make sure you have a great inspector. So keep tuned in Thursdays at 1 p.m. Thank you, guys. Take care. God bless. Bye.